Welcome back to the Explainer. Today, we're doing something massive. We're testing the ultimate smart money concepts and ICT algorithm by actually combining all four pillars of trading into one unified strategy. You know, if you've been exploring these concepts, you've probably felt like you're holding a bunch of scattered puzzle pieces. Well, today, we're finally putting the whole shebang together to see if this unified image can truly help us dominate the market. Let's just jump right in and confront a really harsh reality: the 90% trap. That's right, 90%. That staggering number is the trap that catches, and frankly ruins, most retail day traders. Our mission today is to figure out exactly why that happens, and more importantly, how a fully integrated algorithm is going to stop us from just becoming another statistic. Because here's the thing: traders so often learn just one isolated puzzle piece, like, say, an order block, and then they wonder why their entire setup just completely collapses on the chart. I mean, it's literally like trying to build a house with just one wall. You can't just slap a single concept onto your chart and expect to survive a highly sophisticated market. It just doesn't work that way. So, to actually survive, we've got to respect what we call the four foundational pillars. We're talking about fractal nature, bias, market structure, and liquidity. If we ignore even one of these four pillars, guys, the whole structure fails. You absolutely need all four to keep the roof over your head.
All right, so let's break these down, starting right at the foundation with Pillar 1, the fractal engine.
Our very first step in this explainer is wrapping our heads around the theory of the market's fractal engine. Listen, every single time frame is just a piece of the exact same image. What you're seeing play out on a massive 1-hour chart, it's happening in miniature right there on the 1-minute chart. So if you're only looking at one time frame, you're honestly flying blind to the true reality of the market. And understanding this relationship, it changes everything. Think of it like this: the higher time frame, your daily or weekly chart, defines the big objective. The lower time frame, like your 5-minute or 1-minute chart, well, that's simply where you go to execute that objective. Trying to trade a tiny 5-minute trend without knowing where the daily boss wants to go, that's not trading, that's just straight up gambling.
Okay, moving on, we frame out our structure by adding our second pillar, the 3B bias. Now, having a bias isn't just closing your eyes, pointing at the screen, and picking a random direction. It is about decoding a highly logical market story. Check out how logically we sequence the 3Bs here to make sure we're trading right alongside the institutions. B1 is the frame. Has the market tapped a major higher time frame point of interest? Then B2 is the draw on liquidity. Basically, where's the next pool of money it wants to hit? And finally, B3 is the dealing range. Are we in a premium or discount zone? By following this exact sequence, we ensure we're exclusively buying in a discount zone, right alongside the big banks.
Which brings us right to pillars 3 and 4, structure and liquidity.
To actually confirm the market is moving toward our bias, we have to look for mechanical footprints. We're talking about things like a break of structure, a change of character, and inducement. These are essentially your smart money footprints, proving that a trend is really forming. But hey, remember this: institutions have orders so unimaginably massive, they literally cannot buy without tricking retail traders into selling first. They need those opposing orders to get filled.
And that brings us to the fuel. This right here is exactly why we always wait for a liquidity grab or a sweep. Because think about it, if you can't spot the retail trap, you become the liquidity. You are the fuel for the big banks. It really is that simple, and it's a trap you absolutely have to avoid. So what does this all look like when we put the whole thing together? Let's walk through a live example of the unified trade.
Let's walk through the finished house. Just look at how this time and price algorithm cascades from the top down. Over 1 week, we identify a massive weekly fair value gap as our main objective. Then we drop to the daily, where we confirm a bullish bias because it just swept a previous day low. Down we go to the 4-hour, where price hits our order block beautifully situated in a discount zone. And finally, we drop all the way down to the 1-minute chart. Do you see that flow? It cascades directly from a massive weekly objective all the way down to a surgical 1-minute execution. But hold on. We don't just blindly click buy the second we hit that 1-minute chart. No way. We wait for displacement. Once price hits our 4-hour order block, we wait for that undeniable elephant splash. You know, those big, massive candles, before returning to the tiny 1-minute gap to actually enter. We are waiting for undeniable proof that the big players have officially entered the pool. And by synthesizing all of these elements together, we completely flip the script on risk.
We can ride alongside the banks for massive 500-point targets while risking practically nothing. We're talking about catching a 500-point move versus risking maybe 20 points. I mean, that is the true power of unifying the 4 pillars.
Which brings us to the ultimate verdict of this explainer: escaping the trap.
The undeniable takeaway from this unified test is that the primary reason traders fail really boils down to a sheer lack of broader context. You have got to stop using a 15-minute strategy in a total vacuum, completely oblivious to the fact that you're stepping right into a massive 4-hour trap. Trading isn't about just slapping indicators on a screen, it's about understanding how the algorithm moves from one pool of money to the next so you can finally stop guessing and start following real footprints.
Ultimately, mastering this leads us to the real profit, which is what we call the freedom philosophy.
Because mastering this ultimate algorithm and escaping that 90% trap, it isn't really about competing with the rest of the world. And it sure isn't about the sheer thrill of staring at numbers on a screen all day. The true purpose of all these charts and algorithmic pillars is to buy back your time. Actually making enough to support your family and having the total freedom to spend your days with them, that, my friends, is the real profit.
So as we wrap up this explainer today, I want you to step back from the charts for just a second and really reflect on your ultimate goal. Stop looking at the market and look at your why. Drop a comment below right now and answer this for me. Who are you trading for?